Hello again, everyone. We hope you're enjoying all the sessions so far. Our next panel will tackle the burgeoning trend of prop trading, examining the opportunities and challenges it presents. Let's welcome Christopher Balanzategui, sorry, Christopher.
All good?
CEO of Networks, who will moderate this session and introduce our panelists. Thank you.
Wonderful. Thank you. It's a good turnout. Thanks, guys. It's good to have those friends here, support. All right, so it's my absolute pleasure today to moderate this session and to welcome this expert panel here. So we have Michał, CEO, Match Trader, Marcus, General Manager, Blueberry Funded, Julian, COO, The Concept Trader, and Elina from Chief Revenue Officer from Bourse.
Well done. Thank you. I know it's a mouthful.
My
yeah,
Bergen
well
Aussie accent is really struggling there. Anyway. All right, cool. So we'll start off with a really serious topic. Are prop firms just hype, or are they going to be around for a lot longer?
Me?
Yeah, well, who wants to take that one?
Yeah, I'm happy to sort of take that one away. Yeah, so obviously there's been a very fast rise over the last few years, and it's a question that always comes up: is it a trend? Is it hype? And I think when things rise quickly, it's easy to see it that way. But I think what's sort of made me, even more committed to this space and sort of the movement that is prop trading is what this industry's gone through, this year. As we know, it's had a few ups and downs, to say the least. But I think the fact that we've seen, a lot of firms go under, a lot of people lose, trading platforms, it's been a bit messy, to say the least. But throughout that, we've seen a lot of traders commit to the product and keep using it, but even using it in new ways. They're willing to learn about new trading platforms, things that, a few years ago, if you told me that brokers were going to lose their key platform, the whole business would be gone. But now we're seeing people wanting to try out new technology, new trading platforms, new things, because the thing that has value to them is the idea of being a career trader and getting that access to that simulated capital. That is the core product that has value for them. And the fact that these people, these traders, they're willing to sort of push through all these hardships, almost like in collaboration with these businesses, I think shows that people are passionate enough about the product that it's here to stay.
I will agree with Marcus there. I think it's definitely not hype. I think prop trading has been an evolution in the industry. My view is that traditional trading models such as margin trading maybe doesn't provide the support to properly develop traders. And so traders are out there looking for more. So they want structured risk reward, they want better tools, and obviously the big one, they want better funding. So at the Concept Trading, we really focus on those aspects of prop trading, so having good risk reward, and I think this builds better outcomes for traders. So I think it's definitely here to stay, and it's been driven out of that need by traders who are looking for more.
May I disagree just for the fun of it?
Okay.
All right, I'll do it.
I love that you're holding back so much there.
No, I am. Okay. So I've been in this industry for 15 years. Some of you have been in this industry for longer, I believe. So I think I've seen so many different ways the way this industry evolved. When people would say, oh, the binary option is the the biggest thing now, it's gonna blow up, it's there to stay, or what else? I don't know. I've lived through the S&P event. Now there's prop trading. Before that, it was crypto. It's like, how are we gonna make crypto CFDs? How are we gonna do, how is the marginal trading gonna evolve? I think it's just one of the stages that we're going through. We don't know what's the next stage gonna be, but it's still the same industry. It's just responding to the needs of the traders as they grow, as they change, as we go through the generations. So to me, it's just another stage, yeah.
So you're saying it is hype?
Yeah. yes, thank you. That's what I'm saying, I think.
So you're disagreeing with me? Okay.
I'm sorry.
All right, that's all right.
Sorry. So from my point of view, for sure it's not just a hype. We see prop traders and prop trading companies being active on the market for more than 8-9 years. So for sure it's not just a hype. I believe that what we see today is a not final established form of prop trading activities and prop trading companies. They will evolve, the market will change, but they will stay with us, not like binary options. Yes.
Yeah, it's been interesting because, you know, even Marcus, your point around backing traders and supporting them on their journey to get funded. But, you know, for me, for what I've seen, it's really the fact that, like, the messaging has changed. So, you know, people want to get funded, but the message of be a pro trader, you know, go through the hard work is completely different to really what's been out in the last 2 years, which is $49 get you a $50,000 account, right? Because that's so much more easier to understand. And same thing, like, too, with, I think with the brokers, they've gone too much down the $1,000 1 to 1,000 leverage and, you know, spreads and all these terms that beginners don't actually understand, but everyone understands $49 for a $50,000 account and 80% rev share.
I think you raise a good point there, and I like it that you compare it to the broker side, because I always say, like, one of the best things about the prop trading product in this form is it is a very e-commerce user experience. It's something that's very easy to get into, user-friendly, and a lot of people understand it. What I think is one of the worst things about the prop space is a lot of the people who run the prop firms view it only as an e-commerce user experience. So, and it very much speaks into that race to the bottom. And look, we've seen a race to the bottom in the brokerage space over like the last, 10, 15 years with spreads, trading conditions and things like that. I think that in this prop space, that's been fast-tracked over a few years, that race to the bottom, in terms of conditions, pricing and things like that. But yeah, I think it becomes problematic in that sense, in that when you're only running the business as an e-commerce side, you're not looking at the risk, how you build the challenges and all of the other sides of it. I always say it's like opening a brokerage and doing 1 to 5,000 leverage, giving people 100% deposit bonuses. Like, yeah, you'll definitely get clients, and no worries about that. You might not be able to service them for very long, but yeah, I always sort of liken it to that, because I think there's still a lot of unknowns in this industry in how people should manage risk and operate. So I think that explaining it on that comparison is helpful, so people can understand the risks of that are out there for running prop firms.
Marcus, I think you have a there because, and that's why I think it's just a trend. Because look at the brokers that start offering prop trading as a subscription-based model, or another topic I'm sure you would like to cover, because I know we spoke about it, how prop firms are buying brokers right now. So prop firms are actually becoming brokers. So it's just the way the industry is evolving. And again, some prop firms, the ones that are not here to stay, are prioritizing their marketing with their challenges and the ability to pass the challenge quite easily and so on, over their risk management. So again, that becomes a cash flow business, which is not really a financial business. So yeah, that kind of indicates for me that it's just a hype.
Sorry, go ahead.
Okay, I a bit disagree with you, Elina, because we see that, because what we see in MatchTrader, we see that I agree that some brokers focus mostly on sales and bringing new challenges, new traders coming in, but I believe how the industry of prop trading business will evolve. We will see both brokerages and prop traders next to each other, but now what we need to focus on is the risk management. So first of all, the prop trading companies needs to focus on the pass ratio, which we see that many of them have it too high, yes? So I believe that prop trading companies which will survive will open brokerages will open prop, and the expertise in the risk management will mix together. So we will see much better product very soon, not so aggressive marketing, not so aggressive discounts on the challenges, but I believe the product will stay, but it will stay as one of the product of a brokerage, but it will be usually under different brands, similar names.
100%,
yes,
yeah, I agree with that.
But you don't see it with the binaries. Yes, there are no brokers with the binaries, combined. But with the props, it will be all together.
I think we resolved that it's not hype.
Yeah.
Okay.
I think that's a good segue too into everyone's favorite topic, which is regulation. And so to kick that off, is it going to come in and shut down the party, or what do we think is going to happen?
I'll jump in here. I think the regulator's been coming in on a needs basis, on a case-by-case basis. I think where we've seen more impact is through service providers and technology providers basically doing their dirty work for them. So I think what we'll continue to see is regulators stepping in, and we obviously encourage that. It obviously creates safeguards for the industry so traders feel more comfortable, and also there's greater market integrity. So I think regulation will play a big part. I don't think they're going to shut it all down. From what we're hearing, there's huge demand. Brokers are getting involved in props, and props are buying brokers. It's definitely here to stay.
Yeah, I'd sort of add to that, for that exact reason. I think that the product's here to stay, and, the fact that people, brokers, such as Blueberry's moving into the prop space as well, and prop firms are buying brokers, it's showing that really the idea of regulation being a long-term vehicle in this industry is supported by many people in the industry, really having, being broker-backed, whether from either side being a prop firm first or a broker first, it really just shows that a lot of people do believe that regulation, it's definitely going to be a part of it, but you just want to be prepared. I think the issue we see a lot of firms is they always talk about it, and it's the elephant in the room of regulation's going to come, but you look at them and say, well, what are you doing to prepare for that? You're getting, legal advice, you're looking at consultants, you're looking to buy a brokerage, and so I think that's really the big question of what's out there right now, which is for how are people preparing? Because we still don't know what shape it's going to take. Obviously, there's murmurings and things come out, but I think the big sign of future success is going to be how the existing players, act now and communicate that to their traders so they're aware of future movements.
Yeah, I agree with that the regulation will come. However, we need to think where it will come, because from our point of view, the first one who will regulate it will be probably US, maybe EU. However, they are very slow in the legislation. Then maybe UK, Australia. But we see, for example, on our platforms that the traffic is coming usually from the less regulated regions. Yes, so even if those regions will be regulated, I believe that there will be still demand for that kind of a product. And if I would be a regulator, probably, first of all, what I would be touching, it would be either marketing part of the prop trading firms and the live funded stage. Yes, so the last one. So it depends how exactly the regulation will look like in those particular jurisdictions. This is how then we can decide and discuss if it will survive in those jurisdictions.
Just quick on that, I forgot to mention as well, I think you're really on the money there when it comes to the marketing aspect of it, and a lot of firms don't talk about it. It's always this thing that's thrown out, regulation's coming, it's going to do this and that, and they look at it really through the compliance aspect of how they run the day-to-day business. But something, and I think we'll all know this from the brokerage side, when brokers started to get more regulated over the last decade, is how you're limited in marketing, and how a lot of these prop firms market is, heavily saturated in the performance marketing side of the space. So I think a lot of them look at it in terms of, day-to-day reporting and aspects like that they're not familiar with, but the biggest threat to their business with regulation could be they're limited in their marketing capacities, and if they're too saturated in forms of acquisition channels that they can no longer operate in, it might really cut them off to an extent. And I think that's something that doesn't get enough attention in these discussions around regulation.
Just need a better marketing team by the sounds of it. But on the point of growth. Michał, I'd love to know, what are the main features that prop firms have needed for rapid growth? And, what challenges have you faced in providing those solutions?
So, first of all, for the rapid growth, a prop company needs to have a stable partner who will not cancel them overnight. But to be honest, the challenges we faced by supporting the prop companies, first of all, in February, those were all migration of all these prop companies during a weekends, very quick ones, massive ones. But later on, we noticed and we understood the market, which we underestimated for a very long time, that prop companies are much bigger than we thought. They have much more users than FX broker we were supporting before. And the CRMs works completely differently. So number of API calls they are sending to us, and they need to monitor the equity on the accounts of every single trader if he will pass the challenge or not pass the challenge, should they block it or not, it's extreme. So first of all, the first challenge we had was API calls, amount of it, so we switch everything to the streaming API, so they don't have to pull them anymore, so they can just listen for the updates from our side. So this was the first challenge. It took us a lot of to bring it to the market. And secondly, what we saw is online users. So we had big brokers with us before, but we never reached, for example, 30,000 online accounts with other brokers. And this is what, for example, on MetaQuotes, when I was a broker, we had, 10,000, it was crushing, So now with the prop trading business, you need to support 30,000, 40,000, or even more. So this one, you need to scale system very fast without setting up a new completely server, because on the new server you need to set up symbols, groups, everything. But here we are just launching a new multiplication of particular services, and we are able to do it, yes? So scalability of the system without establishing completely new infrastructure for handling new flow, yes? So those, let's say, three aspects were the most challenging from our side.
Yeah, but that volume was a surprise. And, Marcus, congratulations with the successful launch of Blu-ray Funded. And
Thank you.
I'd love to know, what specific challenges, though, did you have launching that, and, how were they overcome?
I would say the main challenge when it came to launching it were the challenges themselves. I think that it's something when we were getting everything ready, and I've consulted and worked with 20 to 30 firms over the last few years, and I think it's one where when you launch it, you want to make sure it's stable from the get-go. You don't want to launch, take on too much risk, make any mistakes and change things later. It looks messy and it's a terrible client experience. But with that, it's kind of tough because this race to the bottom I was talking about before is kind of warped a sense of a lot of prop firm owners and a lot of prop firm traders, ideal of what a challenge can be. It's kind of tough. I remember when I used to consult with people, they'd say, well, I want to do this challenge. The only way I'm going to get market share is doing this. And I would say, I don't recommend this for a variety of reasons. And they'd say, oh, but this prop firm does it. They're number 4 or 5 in the space. And you'd have to say, well, maybe they're wrong. And they'd say, well, they couldn't be wrong. They're that big. How could they? And we've seen a lot of those people, eventually, because they took on too much risk, blow up or do the wrong things. So it's a tough thing to get the challenges right to a point where, they're competitive. It's good for the traders. Offers a good product, but is also very risk adjusted and sustainable for the firm long term. So it's a tough thing to go to market with something that maybe isn't people's ideal version of a challenge because of what other people are doing. So essentially it's going to market and convincing people, well, there might be other things out there that might offer you more, it might be a bit more in line with what you're after. But the question is, not whether they can service your trading now with that challenge, but can they service you in 6 or 12 months with the level of risk they're taking on? So I think building those challenges in a sustainable manner and communicating that to traders was probably the biggest challenge for us. But I think, it's our mission, and I think that'll play out very well for us over the next 6 to 12 months.
Excellent. And actually it goes on to you then, Julian, with the concept trader, how have you manage conflicts of interest with traders, and what's the best practices that you've employed to support their success?
Yeah, thanks, Christopher. I think the conflicts of interest that we see existing are in a broker prop style model. Obviously, both parties are trying to make money from the market. That's sort of a point where we differentiate ourselves. We have brokers at arm's length. And really what we want to do and the value we want to add is by managing and monitoring that relationship, ensuring traders have great trading conditions. We're able to step in and look at maybe trade disputes, those sorts of things. So we want to look at adding value and removing that conflict of interest. So I think that would be best practice from our point of view. But I do sympathise with what Marcus was saying about that finely tuned balance about managing risk, and I think that'll be a big thematic in the industry moving forward. So we'll come back to it. Yeah,
sure.
Well, Elina, with your Bourse platform as a service support, how does that support the needs of prop trading firms in managing liquidity and risk?
Well, as the babies grow, they become more sophisticated, right? So they have to approach the market with the know-how. And very often what prop firms find difficult is, coming back to Michael's point, it's the general dealing desk and understanding how the markets work. So the abuses of the prop firms, and of course we can look at the challenges separately and at the funded stage separately. The challenges that the prop firms have in finding those abusers who are not necessarily trading the market but are trying to exploit the setup of the broker, the mechanics of it are very similar to what abusers would do in the standard FX, CFDs kind of trading environment. So that's where we help those prop firms learn about, first of all, we help them identify those weaker points, and we help them set up an environment, a trade execution environment that would replicate real market conditions if we look at the challenges stage. And if we look at the funded stage, then we provide connectivity to the execution venues. But I want to go back to your point of conflict of interest, right? And the regulation, actually, in a way. Because if you look at the regulated environment, the regulated brokers, they have to provide what is called best execution, right? And that, if the prop firms are forced to adhere to best execution rules and practices, they will by default avoid the conflict of interest, because they would have to disclose the full conflict of interest. And going back again to self-regulating, if we look at KYC, for example, if the traders have to pass the KYC, then automatically, and actually I think some trade platforms are forcing the brokers to now do the KYC first before they allow them to deposit the money and to be able to buy the challenge. So, or asset management side of it. So I think if it does consolidate, we're going back to this being more of a brokerage model than just the prop firm.
I really hope no one paid attention to that point of doing KYC before depositing. That's like the hardest part of my job.
How's that going?
We're getting there. We're pushing through. But yeah, definitely doesn't help my marketing CPA compared to when there's no KYC up front. That's for sure. Michał, what tools offered by MatchTrader have been the most effective in aiding prop firms to improve profitability and to manage risk?
First of all, we need to understand how profitability of a prop company is generated, because first of all, we need to sell challenges, yes? Then we need to manage the pass ratio, and in the end, the performance on the funded stage, yes? So regarding selling challenges, it's the more job is on the prop company side, yes? Because they are responsible for marketing, they are responsible for the attractiveness of the challenges. However, from our side as a match trader, what we can do, because for example, we see 80% of the traffic is on the mobile currently on our side. So what we do is we are delivering, and we try to deliver a mobile-friendly experience. So whenever the trader will go through the challenge, they will like the platform, because we see right now a lot of prop companies has 3 or even more platforms. So we want that they will choose again a match trader above other platforms. Additionally, we help them with integrating TradingView, which is huge now, and everyone is pushing us to add a TradingView. So this is what we did for them. So on the sell challenges, this is what we can do for them. The rest is on their side. Regarding pass ratio, we see too many prop companies don't care about it. So we see companies on our side who have very high pass ratio, above 15%. Then they don't have money for the payouts. They bring more challenges in. This is not how it should work. Yes. So first of all, we educate them, we tell them how to manage pass ratio, how to add additional conditions to the challenges, what are the best practices on the market. So this is what we are doing for them to help them with the pass ratio. but in the end, again, we are not able to touch those pass ratio on their behalf, so they need to do them by themselves. What we did on our side, we also developed our prop CRM with many features which allows them to add as many as possible conditions, as many as flexible, so they can compete with existing prop companies to present their challenges as attractive, but not allowing for too big pass ratio. Yeah? So on this one, and regarding funded phase, how they can manage it, if they fix step second, so there are not too many clients coming in, we provide a liquidity offer, so we help them to hedge what they don't want to be booked. However, if they will be book everything, the model will collapse. Yes, so they need to be book everything or part of it, because if they will start hedging everything in current model with the current pass ratio, with the current splits with the traders, it doesn't make sense.
Man, that was some excellent points there. I really like the kind of red flag level for the challenge approvals and stuff too, because that can have pretty significant impacts on the business. Marcus, which service or features are most requested by your clients, and what trends are you seeing emerge?
Yeah, it's kind of a tough one. I think it comes back to what I was saying before. I mean, I think we launched very, I wouldn't say conservatively, but I think we launched products that we wanted to be very risk adjusted and sustainable. So like I said, when people come in, they see that and they're like, well, where's my, massive leverage, 60% off challenges, buy one, get one free, it's a tough one. Because I think, they've obviously been led down one road, and now, we're trying to correct that in the industry, or really sort of change the mindset towards sustainability. So I think it's been hard to do that, because you look at it and you're like, well, I guess we could make a lot of quick money if we just turned all those things on. But so like what Michael was talking about, it'll affect the pass rates, it'll affect the business, and you might offer a very good product, but you're going to offer it for a very short time, and that's not actually a good product or experience for the traders. So yeah, I think for us, it's been sort of trying to rebuild that narrative around sustainability and longevity in the industry, which has actually resonated really well. People come in, they come in our Discord and, have a chat and request a bunch of things. And, I got to feel like the bad guy saying, I don't actually agree with that, and we're about sustainability first. And it's, I think, good to see a lot of people then come in and, actually say that's a really good thing to see. It's good to see people coming in, or brokers coming in and, backing prop firms now, with a much longer term perspective on the industry.
Sorry about that. I said a drink.
Oh,
but it's a really good point. I like the word sustainable, because that's obviously where we started from, right, with hype. And I think maturity really comes from being sustainable. And Julian, for yourself, how does the concept trading create a sustainable funding model for traders? And how are these methods different from the challenge-based models?
Okay, so we provide a very simple model. Traders start on a demo environment and then they move to the live trading environment. We have one very simple rule, and that's not to hit the static drawdown. Then what we've done is we've engineered things in the background that we hedge out all market risk and have, I guess, very predictable outcomes, which may differ from some of the other models. So it's a bit of a thing at the company. We don't like the term challenge accounts. We think it kind of gamifies what's going on. We want our traders to feel like they have to earn the right, and so we use things like scaling, different profit milestones, etc., for them to build, I guess, that consistency. And so that is how we look to deliver something that is more sustainable, but also in supporting the client, providing tools, those sorts of things that are going to help them on their way. So yeah, that's sort of our take on that. And so we've built a model where we can tolerate any sort of profit and drawdown outcomes, and with quite predictable, as opposed to the challenge, which is sometimes unpredictable. You would say you're exposed to long tail events if you're not hedging market risk. So yeah, that's what we do different at the concept trading.
And Elina, what key trends and challenges are you seeing in the prop trading industry, and how is your Bourse adapting to them?
How do I answer that in 1 minute? Right, so first and foremost.
You got plenty of time, that's right.
Right. So I think, like, when we look at prop trading in general, the greatest challenge that I see personally, not necessarily related to your Bourse, or we do help with it, is the fact that even the funded accounts, they're not trading their own money. So if we look at their behavior, the way they're trading, even if they're really good traders, right? They will maybe trade conservatively for a period of time, but that there will come a moment when they would decide, why not gamble? Like, it's not my money, I can pass a challenge again. And I guess that's where a lot of decisions have to be data-driven. So you need to understand the behavior of your clients, and not necessarily just on the first stage, on the challenge stage, where of course you want to make sure that if they are abusers who just open 2 challenge accounts and they're just trying to trade opposite direction, you know, you're able to track it through IPs or behavior or whatnot. And you also want to have that data from your liquidity providers, you want to have that execution data in order to be able to shape those challenges. Because it can change even region to region, the way people trade and the way they try to abuse latency, for example. But if you look at the funded accounts, then I think the management of behavior of the clients becomes even more important, especially if you're doing things the right way and you really fund the accounts, right? So I think there is a lot of data, and it's actually more sophisticated than the risk management with the brokerage firm.
All right. So let's go future predictions. Okay. So what's the future hold? Regulation to start off with. What's our bets on?
I think we've tapped into this one a little bit, but I think regulation's here to stay. We'll probably see more big moves from technology providers and platforms and those sorts of things. And I think Marcus touched on this, but I think you'll see that focusing on the US and Europe to start with. So I think in the next 1 to 2 years, we're not getting out of this yet. We're going to keep going through this, and then it'll probably filter down. So that's my...
So Europe, US, 1 to 2 years?
Well, it's just going to keep going. Be intense, regulation.
I would agree. US first. I'm from Europe, so I believe Europe would like to implement them as quick as possible, but as I mentioned, the legislation in Europe is very slow, so I believe it will take them more than 2 years for sure. However, I'm not sure about UK and Australia, because UK usually is much more liberal on many things. It depends if the regulator will be getting complaints or not, how many, prop companies will fail in particular jurisdiction, how many clients they would have, then it will for sure impact the actions of the regulator.
Yeah, I agree with everything said. I think when the regulation hits Dubai is when we're going to see people start to sweat a lot in this industry. I think a lot of people have seen it as a bit of a loophole or something, but forgetting there are regulators in the UAE. So I think that obviously a lot of people have domiciled themselves there for a variety of reasons, but I think, when regulation comes to there, that might change up a lot of the models that people are operating on.
What's your when prediction?
Sorry?
When do you think that would be? Is that 3 years?
I always sort of feel, generally speaking, I'm not really a compliance expert or anything, so just putting that out there, but I would say that, usually how like UAE, we're going to see US, then Europe, then probably followed by like a UK, Australia, then off the back of that, you'll see maybe like DIFC sort of following suit from that maybe, but again, your guess is as good as mine on that.
My crystal ball is telling me Malta within a year.
How far?
Very specific.
Yes.
Nice one.
Let's see. Bets? Any bets?
All right, then what about predictions on client growth? So by geo, what percentage shifts do you think we're going to see in the next 12 months?
I still feel it's lagged quite a lot in parts of Asia. And Latin America to an extent, still very big regions in general, but compared to what I've seen in my experience on the broker side, I think we're really just, tapping the surface. Obviously, this market grew a lot out of the US, Europe and English-speaking places, whereas a lot of these other regions, very built on local trust in that. So the product really needs to translate into a lot of, local educators, influencers, content creators, I think, for it to then pick up steam in these regions. You know, it's still very big regions, you know, for the prop space, but I see parts of Asia, really getting into this a lot more heavily in the next year or two.
Having a look at this from a Google search point of view would make a bit of sense. And I think what we've seen on a worldwide basis, I'll try and drill down a little bit, but huge triple-figure growth in intent and those sorts of things around funded trader terms and prop trading. The trend is your friend, and it's definitely in place. But we saw a few spikes this year as a result of adverse sort of market events. But I think we're on, and I would say between 10-20% in those Europe and US regions that we've been talking about. And then that's obviously going to trickle down and be variable in those other developing parts.
Based on what we see in the platform, assuming that all the regions are equally interested in prop trading, we see a bit lack of flow coming from the Latin and Southeast Asia. So I believe those regions are a bit behind on the percentage basis, but this is only based on our clients database, on our clients who are targeting those regions. So I believe that it will be those regions which will pick up.
Well, my data is skewed, right? But what I can say, it's a bit similar to yours, Michael. Like we'd see all the regions. But what I would also say is that we see a lot. So I see two types of clients. I see prop firms that already have, like I see brokers that are becoming prop firms, and that's one type of client. And for them, it would be Europe, for example. It would be Asia. But then we see another type of client, and that's prop firms that sometimes it's too late to save. Like they would come to us and be like, oh, as you said, right? It's like, that's it. There's like no net benefit of this business. It's gone.
There's this thing called risk that they find out about 6 months into the business and say, what do we do with this?
Yeah, can you fix that? It's like, no, you can't fix that because your financials don't work. Like it just doesn't work. And those are usually coming from the more like Asia, Africa type of regions.
Yeah, if we talk Google search terms, so it was a 800% increase year on year for prop trading keywords for last year on year. And 60% of that was actually Europe-based, right? And then if you actually look at the search volume versus population, so if we imagine, let's say like the US has the most search volume at 9,000, but if you actually do the ratios by the population and get the ratio, so let's say the US has 9,000 searches for prop firms per month, but then they have 400 million people. The ratio is like 20 or something. Anyway, so the study is that the number one with ratio, it was pretty much like Italy. South Africa was up there. Malaysia is up there. So it's really interesting to see the shift in these individual pockets too. So like you do have some in Europe, you do have some in Asia as well. And I think that trend is going to continue to grow throughout.
I was going to say, I think it's really great when you see regions grow, because I look at it coming from the broker side. I've worked in brokerage, for a while, and so I always look at it, broker's popular in all these countries, which countries are lagging to then get in prop from those countries. But the different perspective is when you see countries that grow in popularity for prop firms that were never that popular in brokerage, or at least not from my perspective working for Australian brokers. And I always find that a very interesting insight when you see this product being someone's first interaction with trading. I think I was at a conference maybe like a year ago, and I was talking to a young trader. He'd gotten a few payouts from a prop firm, and I was saying, well, why don't you go deposit that in a broker? And he's like, well, what drawdown do I get at a broker? And he just, the concept of trading his own money at a brokerage was an alien concept. He was a young person, and his only interaction has been through prop firms, which makes me think it's another thing for the longevity of this product, because I think it gets in a much younger demographic because of its lower price point, lower downside risk maybe compared to putting up a larger amount of your own capital. So I think that's an interesting thing to see, is like new demographics that it's able to touch before, rather than existing ones that brokers are used to.
And I think that's the whole shift with the messaging, right? Like, people don't know what 1,000 leverage is versus $400 gets you 50 grand. I think that whole demographic shift for the beginner is what attracts them to the prop because they understand a lot easier, and that education gap isn't really there.
But you know what's the funny thing? They would go, oh, but now I can decide on my leverage. And the only reason why I failed that challenge was because I didn't have enough leverage. So now I can go and get my 100% drawdown.
All right, perfect. Okay. Thank you so much. It's been an absolute pleasure. No. Thank you.